What's good, Tsla family? It's Ray J back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'll break down what's happening with the economic calendar, some important data to be watching for, what I see developing on the charts thus far. But before I begin to divulge information, before I get into any more details, let me just mention a couple of things. Firstly, I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull and deposit $500 into the account, you are guaranteed 20 free stocks. If you deposit $25,000 or more, you're guaranteed 75 free stocks. The offer ends in just 3 days. Anyways, when it comes to Tesla, we have this possible inverse cup and handle like structure that is developing. I'm watching Tesla backtest this resistance at 192.5. We got some good news for some EVs as some earnings came out quite decent for some of these companies like Li Auto, and we got some good news for BYD. But with that happening, as the EV market is trying to kind of like rebound a bit, Tesla's fighting this tight resistance, and we might actually see the market affect Tesla because something very big is developing on SPY and the QQQ, which I'll talk about in just a few minutes. And this could even cause some potential downside in the market. So I'm going to break down what that is in just a few minutes. Let's first go over this. And by the way, guys, I just want to apologize in case my computer is kind of laggy because my Wi-Fi is dead right now. I'm actually using a hotspot for my phone to do this, so it's very important. There's a big outage in my area. I just really hope this isn't too laggy. It doesn't take me too long to upload this video. Anyways, today is Monday, February 26th. At 10 a.m., we have the new home sales coming out. Very minor data, but at 10:30 a.m. Eastern Standard Time, an hour after the market opens, we have the Dallas Fed Manufacturing Index coming out. This might cause some volatility in the market, so watch that very carefully. Then at 11:30, we have the 2-year notes auction, 6-month bill auctions coming out. Not to mention more data as well, which is all going to be very minor, but at 10:30, that's the most important piece of data. For earnings, we had Domino's, we had Berkshire Hathaway, and Li Auto announcing earnings before market open. Then we had Unity and Zoom after market close. And we have a couple more earnings coming out like Lowe's, AutoZone, and a few others as the week goes on. But for now, we're just going to focus on these. Just wanted to note that looking at the Fed and how it affected the markets versus Nvda helped the market pump very, very nicely, but now we're at some tight resistance. We have minor earnings like Paramount, Lowe's, Macy's, which might not affect the market as much. And we'll see how this ends up developing. Berkshire Hathaway is helping the market pump just a little bit because we actually ended up seeing some decent earnings. We did see the railroad and utilities businesses jump 28%. Also, it held $167 billion in cash with the overall revenue breaking record highs, which is very good for them. With all this cash that they're hoarding, this is a sign you should be a little bit careful as the market is developing. So just wanted to note that. But overall, good earnings from them, and that's been kind of like good for the markets. As far as Domino's goes, let's talk about this first. It had good earnings. We saw 4.9% growth in Q4 for retail sales. Net store growth was up quite good. They added 394 stores in Q4, which is not bad, actually. And on top of this, when it comes to income from operations, it increased by 3.4%. The quarterly dividend and share repurchase is looking pretty good as it's been approved by the board. So good for their earnings thus far. For Li Auto, let's just look this up right here. Li Auto also posts its first annual profit. There are challenges ahead, and this is what helped their vehicles surge up about 182%. But overall, pretty good earnings. We're seeing that push, and that's helping the EV sector. For Tesla, there's also some news that the Ford NACS adapter briefly leaked. Looks very similar to the Magic Dock for Tesla. That's some pretty interesting news thus far. You guys can see this is what it looks like right here. This is the CSS adapter that Ford is releasing. That's pretty cool. It's good that it's going to be compatible with the Teslas, and that's going to give Tesla a big advantage as well. Anyways, and now I just want to focus on the charts, trying to make this video very quick because of the fact that I have these Wi-Fi issues. So with this inverse cup and handle, make sure you watch Tesla's resistance at 192.5, followed by 194. And then we have, 196, 198, and then 200. For support, watch 190, 188, 184, followed by the lower 180s. So Tesla, it's trying to rebound a bit, but we have this resistance coming up. I just want to call out that if you look at SPY real quick, okay, SPY has a possible head and shoulders like structure. And this is actually a little bit negative for the market. So we have like a head and shoulders on SPY, a left shoulder here, a head and a right shoulder. I'm going to talk about this a little bit later in more details, but I just want to say if this does play out, this starts dropping, right? If the QQQ's potential reversal signal, this is like a head and shoulders as well on the QQQ. If this starts playing out, and these things start dropping, it's going to drag Tesla down. It's going to be some downwards pressure on Tesla. Okay, I want to give you guys that warning about the markets. So this could be a reversal signal. So just to be clear, okay, Tesla's showing more strength this morning because we got some good earnings from Li Auto, but this could just be like a gap up before they grab more liquidity. I do think the most likely possibility is, since you guys know the levels, we could push closer to this 192 area. If we do break it, 194 could technically come, but then we could be coming back down to 190, and we'll see how that holds, because I do see a possibility of us coming down to 189 and 188 soon, and eventually even the 184s. So the trend does look a little bearish on Tesla. We'll see if we establish a lower high relative to this high right here, because we had this high here, lower high could be made before it continues lower. So there's going to be a risk of downside. I want to give you guys that warning for the morning. So just be very careful. Watch how it reacts to 192.5. If we fail to break this, we could be coming back down to 190 or even lower levels for Tesla. So I want to give you guys a warning. There could be some potential downside back to like 188, 184, and these lower levels down here. So be careful with Tesla, guys. Be careful with the market. The market could be getting a pullback. For SPY, when you zoom in, okay, you're going to notice that we have a possible head and shoulders like structure. We have this left shoulder here. We have a head and a potential right shoulder forming. To turn bullish, we have to break past 508.5 and eventually 510 and start breaking out. To be bearish, you want to see it basically lose 507. If we do lose this, a bigger drop could be coming all the way down, in my opinion, to 503. So there's a possible head and shoulders, which does suggest we could be seeing a big reversal. So be careful and see if this plays out. No guarantees yet. We have to see confirmation of a break of 507. But right now, I want to give you guys a warning. There is a possibility this is going to play out. The market could turn, so just be very careful. Nvidia is trying to push a little bit, but watch resistance at 438. We'll see how it does here. If we do break this, watch 440's resistance. If we lose 436, watch a bigger drop to at least 434, followed by 432 to fill this gap. So there's a possibility this is kind of like a slanted head and shoulders. Nvidia is going to pop into this liquidity zone and make its way back down thanks to Nvidia. So there's a possibility. So be very careful on the QQQ. There is a risk of this potentially playing out. We might be forming kind of like a right shoulder here before the market is getting ready for a slight pullback. So please be very, very careful. But nothing is guaranteed. I'm not saying it will happen. I'm saying watch and see if we get the confirmation we need for this pattern to play out. If we start losing our supports here, we have a possible head and shoulder setup. We could be making our way down to the 200 EMA or even lower levels than that. If it wants to hold up, we could push a little higher. And if we hold above 438, we could remain bullish. But for now, there is a possibility of a trend change, so just be very careful. Now, Aapl, actually, let's talk about Nvidia, then Aapl. Real quick, Nvidia has a similar head and shoulders like formation. We're testing 800 as resistance. If we could break 800, watch 807 and 812, those areas up there as resistance. If we break down, watch 790, 782, 776, 770, and then we have 765 below that as support. In my opinion, with this head and shoulders like structure and this nice liquidity grab up here, this could be a reversal signal. So we might see Nvidia come back down. I want everyone to be very cautious of this. It depends on if we could break 800. If we push into this liquidity zone and reject back down, look for a move all the way back down towards 776 or below that. If we hold above 800, we could still remain bullish, but you have to wait and see. The chart's showing some weakness to me, so please be very careful with Nvidia, guys. And we'll see how well it can try to hold above 800. Do we hold 800? Do we get a rejection and come back down? Watch and see. It's going to dictate the QQQ. But there is a risk of it coming down. I want to just call that out. Aapl has a possible inverse head and shoulders like structure, but the issue with Aapl is I can't guarantee this will play out now because of how the market's looking. To be bullish, you want to see it bounce very close to this 181 area and start pushing back above 183.5 and 184.25 to form that nice right shoulder and start pushing back up. To be bearish, you want to see this as a trap. If you think this is a trap and this thing is going to be losing 181.36 and 180, if we lose 180, we turn really bearish and 178, 175 can be coming. So we'll see which way this breaks. It is struggling to break 182.5 so far, so we'll just wait and see. But just know that there is an inverse head and shoulders. It may or may not play out. Sometimes these are just traps. And just be careful, watch your levels and see if we get the bounce or not. If we get the bounce, it could play out. If we fail to do so and we lose 181.36, we have to hold 180 or else we turn bearish. So I just want to give you guys that warning. That's it for this one, guys. Sorry if I'm talking fast. We need to finish this ASAP. Have a great day and peace out.